to like. All right, guys. So welcome to week 2 of our program. So I believe this week we are going to do so much, yes. And from the first week, we started talking about we started talking about introduction to Forex. We spoke about the basic terminologies in Forex. And on Saturday, I made a catch-up lesson, which we spoke about lot sizes, pips, how to calculate the amount of money you are going to make per trade, and how much you could possibly lose in relation to pips and lot size. So it was a really, really good one, but then it wasn't recorded. I'm so sorry. It wasn't recorded, but it's something very easy. We could always revise any other time. So this week too is definitely for us to go on the second part of Forex, which is the basic analysis. Now, when it comes to that was Wednesday, I believe. I sent you this booklet in the group, which is called Candlestick Bible. Now, if you're really doing Forex, anybody who has not read the Candlestick Bible, then there's so much you still have to work on. Now, this program could literally not touch everything, like it couldn't touch everything in detail, but we are going to touch a little bit of all so that even after this training, any video you watch, any booklet or PDF you come across, you are going to understand so much. Please let's like the last session here, so please. Okay, thank you so much. Let's like. All right. So we spoke of I sent that book for Candlestick Bible. And Candlestick Bible here is just all about you being able to read candlesticks, because here there are many ways price can be represented on the chart. So that's what we are going to do this week, technical analysis. But first of all, before even talking about technical analysis, there are three main ways that traders analyze the market. First is technical, next is fundamental, and the last is sentimental. Now, when you hear sentimental, you get to understand that sentiment. What are sentiments? Sentiments are feelings, okay? Feelings. How do you feel about something? That is sentimental analysis. I could say, oh, I'm feeling that Euro USD could be bearish and all of that. But then that is the least important of all ways to analyze the market. Now, the second here we have is fundamental. Fundamental has to do with news events, whether political, economic, or social. Now, when it comes to politics, it gets to, I know when you talk about political, you understand, you know what is politics, right? Oh, this is the new president of this place. Oh, they have appointed this person of this. When you come to social here has to do with maybe occurrences of maybe natural disasters like maybe floods or maybe tsunamis, anything that can destabilize the economy. You understand? And then when you get to talk about economical is that's the one of the most important aspect of fundamentals, because we have this website. It's called forexfactory.com. Forexfactory.com gives us the economic events that will unfold every single day for 1 week. So here we get to see what is happening on the various major currencies. Now, what do you see here? You see USD, you see Australian dollar, you see JPY, you see Euro, you see Canadian. So all of these are economic events. Economic events like NFP. I know some of you have come across some people talking about NFP, or me talking about NFP. Now you ask yourself, what is NFP? NFP basically. Please mute yourself. I'm sure I did. Let's be professional, please. All right. So we go ahead. Now, when you talk about NFP or CPI or all of these other events, I'm going to talk about that in detail, but they're not in this class, okay? You will realize that these are economic events, things that have to do with the economy financially that affect a country's currency. And you know, when you talk about currency is money. One of the most important fundamentals are economic fundamentals, and the next is political, and then the last will be social. So that is the order in which it flows, okay? And then the most important aspect of whole market, you trying to understand what is happening, is technical analysis. And here, technical analysis is just you trying to study the past behavior of the market for you to be able to predict what? For you to be able to predict the future movement of the market. You understand that, oh, if price was selling, meaning price has the ability to continually sell. So technical analysis is you using past price action to predict future movements. As easy as that. Now, the chart here or price is represented in several ways. Now, this whole platform I'm using, it's called Trading View. Now, when you go to your Trading View, at this corner, this is your top left hand, you're going to see this, okay? Candles. Now, you realize that here you have several ways you could express or there are several ways price could be expressed. You have bar charts, you have candles, hollow candles, line, all of this. You realize that if I put line, this is how it looks like. Now, if I put, let's say, candles, this is my candle. That's that which we use. And now, what do you call these candles? These candles are basically called what? We can't see your screen. Now, my screen is clear. I believe that should be a okay, these candlesticks are called Japanese candlestick. Why? Because it was a Japanese man that invented this movement that he sees price. If we represent price this way, there is more comprehension because it shows a lot on what is happening from the opening to the high, to the low, and to the close. That's something we are going to do for intermediate class. So that's why if you have not yet booked your spot for the intermediate lesson, then I don't know what you're doing because I want in that group, you guys are like 1,000 of you, but then I'm going to need just higher should be 200 people for the intermediate, nothing more, nothing less, just 200. And I'm starting that intermediate lesson next week, Monday. So you have to book your spot for that, and then I'm going to send you into the next group. Okay? Okay. I believe it's okay right now. That's right. Leave me a message on WhatsApp. All right. So this is called, like I said, the Japanese candlestick. And the most famous way of presenting price is through candles like this or through lines. Either you see these lines or you see candles. Okay, so for the learning purposes of this, we are going to use candles because candles give more explanation to what and where price is reacting. Okay, so that is the first foundation of technical analysis. Leave me a message on WhatsApp. You guys are just 25 of you today, but then by the time I'm going to post this video on YouTube, it's going to, like the last video I posted, have over 700 views. I'm like, you guys want to watch after and then you don't come to class. Like, how is that? It's really crazy. But then I have no choice than keep pushing with those who are serious, right? If you're serious, obviously we are going to continue. Now, like I said, candlesticks are the most preferred way of expressing price because it has a lot of information from the candle open, the candle close, the candle high, and the candle low. Okay, and then under technical analysis, we are also going to learn market structure. Okay, market structure, which is how to predict price because the market moves, the market has a structure. Same way you as a human being, you have your structure. We have a structure. Like animals, like a sheep or a dog, they have their own structure, their own skeletal structure. So technical analysis is you understanding the skeletal movement or the skeletal expression of the market so that you can understand that, oh, this is this or this is that. My volume is too low. Are you sure? If you can hear me perfectly, then please let me know. All right. Yes. Like I said, let's continue. You can always rewatch and then you could always watch. My people from Zoom, you could always rewatch. 1 second. It seems you're far from your mic. Let's just manage this. Like I'll have to work on this. All right, let's just manage for today. So like I said, we're going to continue. All right. Now, these things, these candlesticks, the best express price. So everything we are going to learn under technical analysis is just you being able to look at price and then understand that, oh, at this point, something could happen here. At price, it could cause price to sell. So we are going to learn basic market structure. Basic market structure here are things like support and resistances, trend lines, and all these other things okay? I'm going to teach you that. And the extra bonus I'm going to do is I'm going to teach you how to effectively use it, okay? You will not just use it with a blank head that, oh, that is going to help me become really good in trading. No, like I said, all of this is beginner Forex, okay? They're just things to warm up yourself, I mean, before we start continuing to other things. So today we are going to talk about candlesticks so that we set the base, and then tomorrow we come in with basic market structure. So are we okay? If you are okay, you guys on Zoom, let me see your thumbs up. Let me see your thumbs up. If you guys here, let me see your thumbs up, and then we move forward. All right. So like I said, the most common way price is being expressed is using candlesticks, okay? And here are your candlesticks. Now, in this training session, I wouldn't bother you with you knowing all the names of these candlesticks. I'm just going to teach you two kinds of candlesticks, and then that's all. Because when you look at your chart, you can only see two kinds of candlesticks. How to calculate tips? That is something I did on Saturday, and I didn't record the video, nothing. So go and learn from babytips.com. All right. Now, the two kind of candlesticks, like we have just predominantly two kind of candlesticks. A candlestick could either be bullish or bearish. Bullish means buy, bearish means sell. Okay? I believe you're with me. So for the purpose of understanding, I'm going to write it down. So we could either have a bullish candle or a bearish candle. Now, depending on your trading view setting, you could have it in any color or your choice. Okay, but here on my chart, bullish candles are being expressed with color blue. Please don't write on my screen. And then bearish candles are being expressed with black. Now, most of the times, the most common colors you're going to get is green and red. Red always for bearish and then green for bullish. Okay, but here I have blue and black. Blue for buys, black for sells. So every single blue candle you see here are buy candlesticks, while the black candles are sell candlesticks. So anytime you see blue, it means that there was buy pressure, okay? Buyers entered the market and there was an increase in price. Price moved from a lower level to a higher level. And anytime you see a black candle, what are you going to see? You see sellers coming to the market, meaning price moves from a higher price to now a lower price, as simple as that. So these are the two kinds of candlesticks you're going to find on any chart. Now, for on the bullish candle, we're going to draw like a small tree. Okay. Now, on the bullish candle, okay, on the bullish candlestick, or candles, you have two types, okay? You have two types. The first one I'm going to teach you so that you wouldn't end up with a lot of crazy ideas in your head, because these candlesticks have names. If you go through that PDF I sent you, Candlestick Bible, you're going to have all kinds of names: a hammer, a pin, a three soldier, this and that. All of those names are just there to distract you. I am going to categorize all of those kind of candlesticks with all of these names into two kinds. Now, on the bullish candles, you could either have an engulfing candle, okay, an engulfing candle, or what? Or a contraction. So either a candle is Either a bullish candle is engulfing or is definitely contracting. Okay, an engulfing candlestick or contracting. Let me say contracting and not contracting. Now, contracting candlestick. Okay, now why do I just simplify it into these two? Because if you look at your chart here, look only candlesticks with color blue, okay? Just look at it. You realize that either it is engulfing means it is really bullish and then it is really strong, and then contracting means it looks really small with a small body. So a candlestick has a body and a wick. Now, all of these tails you are seeing here, we call them wicks, and then all the body movement, like the whole, that's called the body. Either you have a body, a candlestick is made up of a body and a wick, and then engulfing candlesticks have very big bodies and small wicks. Okay, they will literally look like this: very long or big body, and then very tiny wicks, like that. So that is an engulfing candle. This is a bullish engulfing candle. A bullish engulfing candle. Now, when you look at your chart, anywhere you see this bullish engulfing candle, it means there is a lot of buyers. There's buy pressure. There's buy pressure on that point. Just keep looking at it. There is buy pressure. Now, the second one you have a contracting bullish candle. It's in color blue, but then it's contracted. So if a candle is contracting, you realize that it's going to have a small body and then a very long wick or a tail. So all bullish contracting candles look like this. They will always contract, and the contraction will come from the downside. Meaning at first, price was like this, and then buyers came and pushed it, and then it ended up like this. Now, somebody might call it a pin, some will say it's a hammer, some will say those names, but then just put in your head, all of these are contraction candles, okay? And they show that at one point, price was an engulfing candle, and then buyers came in and they pushed price up. What you need to know are the interpretations of these candlesticks and literally not their names, okay? Now, when you see price end up like this, it means that buyers were in the market and they moved price from where? They moved from a very low point and then to a very, very high level, and they closed like that. Okay, they closed like that. Okay, so these are your two kinds of candles. Either it's engulfing or it is contracting. Now let's go to the second kind of bearish candles. Okay, so on the bearish candle, we are going to have same thing. Either it's engulfing or it is contracting. All right. Oh, sorry. Either it's engulfing or it is contracting. Now, engulfing means it is pushing to the downside with a very big body and a small wick. A very big body and a small wick. And what does it mean? It means that sellers are in the market. Remember, I told you bearishness means sell and sell and sell. When they say that the market is bearish, it means that the market is, or the market has been selling. Sellers are in the market. Okay, I'm going to block this person. What the heck do you think you are? All right. So either you're going to have an engulfing candle like this, or you're going to have a contracting one. For example, these ones are all contractions. Okay, they are still color black, but then they show contractions, they show contractions, they show contractions. So look at this black candlestick. Either you're going to have a very strong one, or you're going to have that which looks like a contraction. So where these candlesticks appear on your chart really, really matters. And that is what we are going to start doing tomorrow, which is market structure. So for today, all you have to keep in your head is there are two kinds of candlesticks you're going to need. Either it is an engulfing one or a contraction. Either price is moving with so much strength, meaning it is engulfing, or we have a diminishing strength or diminishing buy or sell power. And in that case, it is going to be a contraction candle. So these are the two kinds of candlesticks you are always going to get on your chart. So if you know that, you're going to rest easy. You will not know, oh, this name is a this, because the moment you start keeping this name to your head, you're going to use them like tools for confirmation, like name, not knowing that you even need to understand what the market is doing. For example, you see this three contraction candlestick. This is one, this is two, this is three. What does it mean? You need to have it in mind. This small body, what does it represent? This very long wick, what does it represent? So that is the whole idea. If you can interpret this chart, interpret what means this candlestick, you're good to go. You don't need to know the name. Okay? Same thing here. You see this very strong bearish candle. What does it mean? It means sellers are in the market. And then you see this contraction. What does it mean? It means sellers have reduced until this next candle cannot even express, or it cannot show that they're in the market. The only thing that will make you understand that sellers or buyers are here is candlestick. Now, if you're using a line chart, you will never know. All you get is a line. That is why when most traders back then were using these line charts, there was no comprehension. Like right now, how am I going to take a trade? How am I going to take a trade? What do you understand by this? You understand basically nothing. But then the moment you switch to candlestick, you get a more better representation. You get a more better understanding. And that's it. As simple as that. So candlestick, not difficult. Today we have touched the most important, which is the types of candlestick. Now tomorrow we are going to work on the areas these candlesticks react on, because when it is very engulfing, it means it is coming from somewhere. If it's a contraction candle, it means it is on a certain point. Okay, so that is what we are going to work on. Now, if you have a question here on Zoom, please do well to ask me. If you have a question here on TikTok, also try to ask that question so that we answer for the remaining time we have left. Okay, make sure you ask your question, please. So anybody that does not understand how to calculate the pips and all of that, you can learn from babytips.com. Like I said, I made that lesson on class today here in TikTok, and it was really interesting. What time will you come live tomorrow? Tomorrow 8 a.m. GMT plus 1. Okay, so technical analysis is the most important of all after you have fundamental analysis. Last, sentiments are just sentiment, their feelings. It doesn't have much to say, but then this technical analysis, you have to open your ears and then look at it. That's why for homework today, as much as possible, go back. I'm going to resend that candlestick Bible in the group. Make sure you go and then read through it. Okay, they are going to teach you how candlesticks came about, and then when you see a candlestick, how do you read it? Because I'm not going to teach you how to read a candlestick right now, because if I do, most of you are really going to get confused. Okay, keeping aside the name, when is the best time to sell or buy based on candlestick position? Like I said, candlesticks don't work independently. They work when paired with market structure, which is what we are going to touch tomorrow. Market structure, because depending on where price is, depending on how the candlesticks are, whether engulfing or contracting, that is when you're going to make a decision. So we are going to do that tomorrow. Yes, ask another question, please. Ask another question. So I don't want this lesson to be too long. We are going to be ending soon now. How do you find your POR? My goodness, we are not even there. Okay, we are not there. One step at a time. One step at a time. So that's just it. Candlesticks are very important. Remember, I did not say candlestick pattern. I did not say candlestick patterns. Now, most of the times when you go for beginner courses, what they are going to teach you is candlestick patterns. I've not taught you candlestick patterns. I have taught you candlesticks, and all I've taught you is engulfing and contracting candles. Either it's engulfing or it's contracting. Either it's a bullish engulfing or it's a bearish engulfing, or it's a bullish contracting or it's a bearish contracting candle. That is all. I haven't spoken about candlestick patterns, because most of the times many people will teach the patterns that, oh, if you see certain candlestick moving like this, moving like this, moving like, it means that price is going to sell. No, 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 I don't teach you that, because that is not how you analyze, and that is not how I am going to teach you. Okay? Green is, blue is. Now, depending on your settings, okay, depending on your settings on TradingView, you can have whatever color you want. So here for me, blue is definitely a buy, and then black is a sell. But the default setting on TradingView will present bearish candles as red and bullish candles as blue, as green. Sorry. That's the default setting of TradingView. You're going to have all buy candles as green, and then you have all sell candles as red. Yes, tomorrow we are going to have another session. Yes, we're going to have another session, same time, 8 p.m. GMT plus 1. Like that. So it doesn't matter the candle color. All you have to understand is price pushing up or is price pushing down? That's it, right? You don't need to know the color. But then this is my preferred color, blue and black. That's it. Yeah, I'm recording. I'm going to send it. I'll upload it on the Telegram. No, sorry, on the YouTube channel. Like I said, the previous one I posted like 2 days ago, it has over 700 views. And then I realized that most of you want to watch after and then not come to class, which is, it doesn't make sense to me. But then I am definitely in no position to tell you what to do and what not to do. Remember, this is the last part for the beginner level. Next week, we are going to touch intermediate. Intermediate has to do with intermediate structure, market structure, meaning I'll teach you a little bit of advanced market structure, and then I'm going to teach you a lot, yes. A lot, because most of you find it difficult to even interpret the setups I teach or I give out every morning. So if you fall inside that category, you don't know how to even interpret these setups I give, then come for the intermediate class. And I wouldn't stream it here on TikTok next week, and I will not as well post it on YouTube. So it was strictly for those who have done what. For if you book your spot, I mean 200 people only. Apart from that, that's that. Just 200. After that till January, contracting candles look like engulfing. How would you call them? Because they have more. No, a candlestick, a contraction candle cannot look like an engulfing. Because they have much body as well as weak. No, 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 no. I'm going to show you something. The recording gives us more understanding, because you can always go back and play until you understand. That's true, Samuel. Now, let me talk about this, which Samuel was talking about. Okay, that's contraction candles look like engulfing candles. If you look at this chart very well, you will see that there is a difference. My YouTube link is in my bio. Now, there is a difference between this candle here and then this one. Or let me pick this one. This blue one, any blue candle you see here, there's a difference between this. That's why there's one thing you can say that this one resembles. When you see a contraction candle, you will know. All contraction candles have what? They have very long width and a centralized body. Either the body is centralized, or it's either to the top or to the bottom. Whether it is a bullish engulfing or a what? A bearish contraction, sorry, you're going to understand. For example, this here is a bullish contraction candle. Why is that? It has a long wick from below. Okay, so it's a bullish contraction. Bullish contraction. Understand? Bullish contraction. Write me on WhatsApp. Okay, that's a bullish contraction. So when it has the long wick from below, that is a bullish contraction. But then if you have the long wick from above, that's a bearish contraction. For example, this one, okay, anytime you see the wick be longer than the body, then obviously that's a contraction candle. But this here, at one point, price was very, very bullish, and then after it contracted, which way, which direction? The sell direction. So that's why it is called a bearish contraction candle. And look at it, go to your chart. Anywhere you have contraction candlesticks, ask yourself, which is this? Is it a bearish contraction or a bullish contraction? And sometimes you could even have bullish contractions with a different color. For example, this candle here, it is blue, right? But then it has a longer wick rejection from the top. So that is still a bearish contraction candle. So long as the contraction comes from the top, it's bearish contraction. When it comes from below, like this one, then you're going to call it a what? You call this one here a bullish contraction because price contracted from below and then it ended like this. So that is a bullish contraction candle. Though it has color black. Though it has color black. But then, most definitely, I just want you to understand this. These are bearish engulfing candles. After you have a lot of movement, like a lot of engulfing candles, you're going to have contraction candles. After you have a lot of contraction candles, you're going to have engulfing candles. So the market moves towards in a cycle. After contraction, expansion, after expansion, contraction, like that. So that is how it moves. So for intermediate, I'm going to teach you why you're going to see price either as a contraction sometimes or then as expansion sometimes and then back to contractions. That is it as easy as possible. Pin bar candle. That's why I said I don't want to be calling the names because the names do not matter. The names don't matter at all. All you need to understand is where is the contraction coming from. That's it. What's my today's analysis on gold? It's check my Telegram handle. Everything is there. All right. So our lesson ends for today, you guys. So we are going to continue tomorrow, hopefully. Okay, you guys are on TikTok. If you want me to analyze for 1 second, then just hang in there and then let me just go back to Zoom and then I end the lesson. So you guys, thank you so much for today. Those who want to always watch after the class, I am going to do well to do what I'm going to upload the video maybe by 11 p.m. I'm going to upload the video so that you can watch. Now, you're not in the intermediate, leave me a message right now. You have to create your account. Most of you have not created. Go and create your account. Scroll up, get the link, create your account, and then text me, and then I'm going to add you. Remember, I want just 200 persons, not much, like not more, and then not less. And we are going to start next week. Yeah, leave me a message on WhatsApp if you've done it already. Even you here on TikTok, if you want to join, then do well. So you guys, we're coming in tomorrow again. Bye. Remember, read that candlestick Bible so that you can understand a lot. See you.